Good day, ladies and gentlemen. Once again, I will be recording this question for third year's financial accounting 3, and the topic is on impairment of assets, which is impairment, impairment of assets, impairment loss, and also obviously revaluation. They go hand in hand. This was extracted from the April 2009 assessment. This question is out of just 8 marks, and I hope to spend 8 minutes. If time doesn't allow me, then that's still good. Before reading the information provided to us, it is always recommended that we first go through the requirements and know what we are required to do. We are required to use the template or the table that is provided to you students, and to record the following values under the historic cost value by the end of December, and after at the end of December, which is 2007, and at the end of December 2008, we must do the actual carrying value and the historic carrying value before any impairment was taken into account. Then after, there is a note that says use the relocation approach to calculate the depreciation for the financial year ended 31st of December 2008. Then after, we go further to number 3.1.3, where it says the actual carrying value after the impairment loss has been taken into account. So they are telling us that at the end of the year 2008 there is definite impairment loss. Then we are to calculate the carrying value after that impairment loss has been taken into account. Now, the reallocation approach is not the first time of this. In the second year, there is the reallocation approach, where now there will be a change in estimate in terms of the useful life, or change in estimate in terms of the residual value. Those are the normal changes in estimate. Then after, let us read what is provided to us. It says SA Works Limited is a small listed company producing specialized equipment to be used in to exploit diamond. So this is definitely in the mining industry, a specialized equipment for equipment machines. Then this specialized equipments, it says it is a company's policy to show machinery at a cost less accumulated depreciation and accumulated impairment loss, and a cost model is used. If the machinery was revalued, it will be shown at the revalued amount less accumulated depreciation and accumulated impairment loss. Then after, it says the financial year end of this company is 31st of December. Each and every year, that will be the end of the accounting period. And we are provided with the following information. And the following information says on the 1st of January 2006, a machine which is in the manufacturing of the specialized equipment was acquired at a cost of 950,000 rands. So now this is the cost of this machine, which took place at the beginning of the 2006 accounting period. Then it says the machinery had an estimated useful life of 5 years, and the residual value for this machine was estimated to be 50,000 rands. So now, with this information that we are provided, we can then now do the initial recording. And the initial recording will be recording the cost of this machinery or equipment. And I said this is the template that would have been provided to you. Actual carrying value, CVs for carrying value, and historic carrying value, because I have limited space to be writing carrying value in my material for recording. Now we have to record the cost of this asset, at the beginning of the year, cost at 1st of January in the year 2006. I'm writing like this because of the limited space. Then under actual, we still record the same 950,000 rands, and under historic, we record the same 950,000 rands. We record in both columns from the beginning. We don't record from the beginning of the change in estimate. I want to highlight that because in second year, you'll normally not record anything under historic, but when there is a change in an estimate or in the accounting policy in terms of the depreciation, then now that's when you'll transfer that carrying amount into the actual column. But we begin recording the cost from both of the columns. Then obviously depreciation has to be taken into account, and the next step is to say depreciation, and the format, guys, once again becomes very important. Follow the chronological order of the writing. The naming is very important. Disclosure becomes very crucial at third year. And when I say disclosure, meaning the presentation of what you do must look exactly the way it's supposed to do, and it must follow the order. Cost at first, and you might be penalized if you don't follow such order. Then now we calculate depreciation for the year 2006. Then now in terms of workings, I might not be able to show all the workings, but please do show all the workings. We know that the calculation of depreciation is cost minus accumulated depreciation divided by useful life, and we don't have to allocate for the number of months because this asset has been in the business for the full year. 950 minus 50,000 divided by 5. Remember, there are 3 zeros that are missing there. 950,000 minus 50,000 rands, it will give us 900,000 rands. We divide by the useful life, and this will give us the depreciation for the year 2006 as 180,000 rands and 180,000 rands. Remember, this is under historic. Then we also record it as actual. Then we will definitely have another depreciation, but let us check if maybe there is not testing of impairment loss just after this period. So now what we did is to record depreciation for the year 2006 and to record the cost of the asset for the year 2006. Then obviously cost minus depreciation, which is 950,000 rands minus 180,000 rands, will give us the carrying amount at the end of the year 2006 as 770,000 rands. 770,000 rands. So now this will be the carrying amount at the end of the year 2006. Now let us go to the next information in the year 2008. In the year 2008, provided information at the beginning of the period say that the machine was revalued. It's not impairment now, it's the revaluation. Then it says the machine was revalued on this date at 740,000 rands with an estimated remaining useful life of 4 years, and the residual value of the machine is presented now to no longer be 50,000 but 40,000. And take note, useful life previously was how many years? It was 5 years, but now they say the remaining is 4 years. Now remember, which year are we now? We are at the beginning of the year 2008. So now 2006 has passed. Then we know that there is obviously another year there. 2007 has passed. So 2 years has passed. So now if 2 years has passed, it should be 5 minus 2. 5 minus 2 years that are passed. So that means the remaining useful life supposed to be 3 years. But because of the change in estimate, the remaining useful life then now becomes 4 years. This therefore means that they can say the total useful life, or not remaining, estimated total useful life is equal to 6 years. So in other words, they have added 1 year. So if they say total is 6 years, then you'll have to say, oh, total 6 years minus the 2 years that have already gone. Then after now, that will give you the remaining useful life of 4 years. So we focus on the remaining useful life for our calculation, not on the 2 years that have already passed in this context. So now even if you are given a total of 6, you'll have to deduct the one that have already passed, which is 26 and 27. Then after, you use the 4 years of the remaining useful life. Now, remember, historic remains historic. So now remember again, this change in estimate happens in the year 2008. That means depreciation for the year 2007 still needs to be taken into account. So now let us take into account depreciation for the year 2007, which obviously will be the same calculation, 950,000 minus 50,000 divided by 5 years. It will give us 180,000 rands, and also 180,000 rands under the historic and also under the actual. Remember, historic is history, and history remains history. It does not change. Now, meaning we don't change anything under our history, but we keep information based on the history. So that means our depreciation under historic will not change, but our depreciation under actual will change based on the changes that are provided in the information as we are reading. Remember, now we are at the end of the year 2007. So now the minute we are at the end of the year 2007, then we need to get to the carrying amount just before the change in estimate. If you wanted, you could have a carrying amount here, just that it was going to be costing a lot of time without any extra marks. You could have said here balance. You could have said balance here at 31st of December 2006. Then you do the same thing for 2007, then balance end of December 2007. But if there is no change in estimate between the periods, you don't have to do that. You just have to record depreciation for all these years, consecutively. So now meaning you just have your depreciation for the 2 consecutive years following each other. As you can see, the depreciation for 2 years and depreciation for 2 years without having to split that and show the balance at the end of every accounting period. So now that is why now we then come to a balance at the end of the period 2007. Then we say balance. Our balance is at 31st of December 2007. Remember, this balance is just a day before the change in estimate, which is the 1st of January 2008. So remember, closing balance becomes opening balance. So in other words, this estimate is at the same period as the end of December 2007, which is beginning of 2008. So now let us calculate our carrying amount. Then I will say 950,000 rands minus 180,000 rands minus 180,000 rands for 2 years. This will give us 590,000. It gives us 590,000 rands, and we record this same amount in both columns because at this point there is not yet a change in estimate or in the accounting policy. Therefore, now a day after, which is the 1st of January 2008, there was a change, and they are telling us that this specialized equipment or machinery, which is a specialized machinery or equipment, was revalued to 740,000 rands. Now, if it goes to 740,000 rands, how much currently is the value of this machinery or equipment? The current value, historic and current, or historic and actual, it is 590,000. Now, if we say it's going up to 740,000 rands in terms of the revaluation, we need to deduct its current carrying amount, which is 540,000, so that we can realize that the revaluation is a total of 150,000 rands. Remember, under historic, you don't change anything. The history must remain there. all that we do under historic column, we calculate depreciation as usual every end of the year. That's the only thing we do. If there's a change in estimate or a change in the accounting policy, be it a depreciation or be it a residual value, we don't touch the historic. Historic remains historic. Now we are discovering that our carrying amount must increase. I don't know why I wrote this brackets. We have discovered that our carrying amount must be increased by 150,000 so that it becomes an amount of 740,000 rands. The only column that we change, guys, is the column of the actual. How much is the actual value of this asset now? Otherwise, how much it could have been its value based on the history or on the initial estimate without the change in the accounting policy or the change in estimate. Then after we have our revaluation. So now that means the revaluation amount which go to your statement of profit or loss at the bottom there under other comprehensive income. There you'll find the revaluation surplus. Revaluation on the first of the first month in the year 2008, it is 115,000 rands. And remember again, we don't change anything under the historic column. Now this is the revaluation now, which bring us to a balance. Now this brings us to a balance, and the balance is at 1st of January 2008. Then please there say after revaluation. Then here you can say before revaluation. Please provide space for yourself there. It's very important, a more detailed explanation for your answer and for the satisfaction of the examiner, so that you can show that you really understand this easy topic. Now we have our carrying amount that must be used. Remember now that our asset, which is our specialized equipment, its actual value is 740. The remaining useful life is 4 years, remember. But under historic, we keep the history depreciation at 180,000 rands. Now, we definitely need to take into account the depreciation now for the year 2008. Because in the year 2008, the only thing that we are seeing in 2008 heading, this is all that we see, and now we are responding to this heading where there's a change, or there's the revaluation, change in the estimated useful life, and also the residual value of 40,000 rands. That means now when we're calculating the depreciation, it will be 740,000 rands, which is the new value under actual, minus the residual value of 40,000 rands. Then we divide by the remaining useful life. This will give us the depreciation for the actual column, minus 40,000 rands. Obviously it will be 700,000 rands, and we divide by 4 in order to get to 175,000 rands. So now we are calculating now this new depreciation. Not necessarily new, but it is new depreciation under our actual column. Then we have our depreciation, and our depreciation now is for which year. We always specify the year. We have our heading that says depreciation. Highlight the fact that, guys, I am writing these headings and they are not by mistake. It is a principle or a disclosure that needs to be there. Disclosure is all about how you present your information, and in a disclosure, information must be presented in a specific format, and if you miss that format, you might get a penalty. Now, more especially third year disclosure, guys, is very important. The dates that need to be written must be written, and every small detail must be there. Now, we say year 2008 depreciation, that is where we are. Then we say 740,000 minus 40,000 divide by 4 years. Remember, under the old method, we don't change anything. Under the old method, we still have 950 minus 50,000 divide by the total useful life, not the remaining, the total useful life. If you want to use the remaining, you can still use the remaining, but I don't want to go there. You can just take your previous carrying amount, you divide by the remaining, and you still get the same 180,000. Then now I will be writing everything in this one line, although calculations are in two different lines. Then we have a total of 175,000. I think I calculated that, yes, a total of 175,000. Then we have 175,000 under actual, but under historic we keep our 180,000 rands. We keep our 180,000 rands. Please, you can say semicolon and show calculations here because I have limited space in my device, so I don't want to end up running out of space and writing on the next page. It is not presentable to present financial statements in two different pages. So now we keep our history as our history. History does not change. Old remains old. Then after now, we will definitely have to get to the balance after that. We'll get to the balance after that. So now we need to get to the balance at 31st. We don't say carrying amount. Why don't you say carrying amount? Is because the heading already says actual carrying amount. The heading already says actual carrying historic carrying amount. So the heading already tells us what we're calculating. So worry not about saying carrying amount. No. That's not your focus now. You just say balance. Then we say balance. We say balance at what date? At 31st of December 2008. So this is our balance at 31st of December 2008. Then now let us look at how much is our balance. Remember, depreciations are negative. Depreciations are negative. Let me check if I've been consistent. And I don't know why I am writing all these negative signs. Not everywhere there's a negative sign. Balances are not negative, and I'm sure you have identified that. Depreciations, both of them are negative. That is very important. 150,000 revaluation is positive. We're adding that to the balance. Then depreciations are also negative. So please make sure that you keep that as is. Don't make a mistake of not writing the negative amount for depreciation, and also impairment loss. Then after, our balance will be 740,000 minus the 175,000. Then you say minus 740,000 rands. This gives us 565,000. We have 565,000. Then we say 590,000 rands, which is under our historic. We deduct 180,000 rands. This gives us a total of 410,000 rands. A total of 410,000 rands. Now remember, this is a balance at the end of the 2008 accounting period. It's not in the 2009. It's at the end of 2008 accounting period. Now let us see what else are we provided or given with regards to that also. Now that is at the end of December 2008. At the same period, we calculated our balance of carrying values. We are then told that it was estimated that the net selling price of the machine amounted to how much? 500,000 rands, which is the selling cost, and the value in use. The minute you see the value in use, what comes into your mind is RA. What is RA? Is recoverable amount. Recoverable amount. And we know that recoverable amount is always compared with the carrying value at that point in time in order to determine if there is impairment loss, or if there is no impairment loss, then there must be a reversal of the previous impairment loss if there was impairment loss in the previous period. So now we need to say how much is the carrying value under the actual column, guys, only because we don't change things in the historic. We only change things in the actual column. So now we need to say the carrying value, vice versa the recoverable amount. And the recoverable amount is the greater of the two. we take the greater between the value in use and the net selling cost or the net selling price. Now our net selling price is 500,000 rands and our value in use is 480,000 rands. That means 500,000 rands will be our recoverable amount. That must be compared with the carrying amount under the actual column. Now on that same note, let us then now go and compare how much is our carrying balance under the actual column. The carrying balance under the actual column, it is 565,000 rands, and we can obviously smell at this point in time that there is a likelihood of the impairment loss. Obviously we can smell that there is a likelihood of the impairment loss. There is a likelihood of the impairment loss. Why am I saying there's a likelihood of the impairment loss? Is because I can see that the recoverable amount is greater than the carrying amount. Sorry, the recoverable amount is smaller than the carrying amount. Our recoverable amount, it is 500,000 rands, while our carrying amount is more than that. So now we are saying our assets are overrated according to our calculation or in our books at this point in time. So now our value of our machine specialized for mining purpose, mining diamond, is overstated at this point in time because it should be 500,000 rands, not 565,000 rands, in comparison obviously with other similar or same machines used by other companies in the industry. So now we say our recoverable amount, it is 500,000 rands minus our carrying amount 565,000 rands. Because carrying amount is more than the recoverable amount, therefore the difference of 65,000 rands becomes an impairment loss. So now meaning we have accounted for the impairment loss. That means we then get to the carrying amount at the end of the year. It is the only time now you say carrying amount because the requirement was to calculate the carrying value. So we needed the total at the end to say carrying value at 31st of December 2008, meaning this is before the impairment, this is after the impairment was taken into account. Also very important to highlight. Remember, at this point in time, we are not doing anything under our historic column because we don't impair the amount under our historic column. So that means we still get to have the same amount at 410,000 rands. Now there's one thing that I want to highlight now in alignment with the second question. In the second question, we need to look at this impairment, more especially if there is the impairment can lead to the carrying amount being less than the 410,000. So whenever we have our impairment, we need to make sure that our impairment does not lead to the carrying amount of this asset under our actual column being less than the carrying amount under the historic column. So now how do we limit that? We limit on the amount of the impairment that we must take into account. It must be to such an extent that the impairment must not reduce the carrying amount of this asset to such an extent that it becomes less than 410,000 rands. So now we have to look, we have to have an eye on the carrying value of our asset under our historic column. Now the next question will bring your perspective, will bring that perspective that we might not be allowed to record the entire 65,000 if the 65,000 will lead to the carrying amount at the end of the year being more than that 410,000 rands. So now there is a limit in terms of the carrying amount under our actual column. We cannot just impair the value of our asset to any lower amount less than the carrying amount in our historic column. Now with that being said, we have definitely responded to all the questions that we needed to respond. And now you will see they separated everything in details, do this and do this. At the end of the day, it all fits in one table. But let me just show you all the marking in terms of how the marking will take place. The 590,000 is 3.1.1. This is what was required. Then the other one, there is another mark that is specifically for 565,000 where you are required to calculate the impairment loss. So now where there was a requirement for the impairment loss, therefore now this will be 3.1.2 because impairment was a requirement and the carrying value at the end, therefore now this will be 3.1.3. Then now this is how just in terms of arrangement of the numbering as you were instructed to record 3.1, 3.2, 3.3. Guys, with that you've been wonderful. 35 minutes is the exact time with some seconds. See you in my next recording. Thank you.